Hi, this is Kerry Artek with Wicked Stocks bringing you the daily QQQ report for Wednesday, December 15th, 2021. Before I jump into the charts, just as usual, want to encourage you to please click like. If you like the new daily QQQ report, please click like each and every time you watch it, and also subscribe. Please subscribe to the Wicked Stocks YouTube channel. It will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. The daily QQQ report and the daily SPY report both go out by around 6 p.m. Central Standard Time, Chicago, each and every trading day for the next trading day. We also put out a free stock pick a week and other analytical videos that we put out on a pretty regular basis. Let's jump into the charts here. I want to underscore two levels that either one of which may actually be in reach today. I've got 383.13 below the market. I know you're probably familiar with. It's the low settlement price. We fell into that 383 handle on Tuesday. We did not test 383.13. We came off the 383 handle nicely as the day wore on. But I do think that holding below this 392.34 to 393.06 region, and they are nothing more than highs of lows, lows of highs. 392.34 is the high of the low from about a week and a half ago, and 393.06 is the low of the high from about 4 days ago. There's also some Fibonacci retracements in there, and also what I like is it's kind of a gap area, that we leapt over. I think it was a week ago yesterday when we had the Omicron kind of neutralizing news. The market sort of gapped up and over that area. So we have it's not really an island congestion, but it's pretty darn close. I mean, yesterday we gapped below that area, and so it is there. 392.34 to 393.06, able to contain buying really through the balance of the week. And, below which I've been mentioning 383.13 as a quick target, and that was almost realized yesterday. I've sort of lowered it really to 379.52, which is the low area from about a week and a half ago. That 392.52 is a 50% downside retracement from the October low against the more recent November 22nd high. It is an area that can contain session weakness. So, if we test it today, it can contain daily selling pressures. But honestly, I think holding below that 392.34 to 393.06 area, you should allow for the market over the next week or two, perhaps by the end of next week, let's say, or sooner, to continue south into the 368.72 to 373.23 area. Now, it's not a significant sell signal at play right now. It's just the fact that we gapped back below that area that is sort of represented by 393.06. And so the path of least resistance is down right now below 393.06. And so, let's take a look actually at more the fine-tuned intraday levels. 389.96 above the market is a 3/8 upside Fibonacci retracement just over the last 4 days, and 383.13 is nothing more than the low settlement price from about a week and a half ago. We can zoom in here at the support and resistance levels, and you can see they are intraday containment levels. 389.96 can contain intraday highs, 383.13 intraday lows. We could trade inside that zone for a good part of the day. If we push above 389.96, then 393.06 is in reach, where once again we can top out through the balance of the week, and below which you should allow over the next week or two, let's just say by the end of next week, bearish continuation down into that 368.72 to 373.23 area. Now, if we were to close above 393.06 today, then we should, I'm going to say tomorrow, under that kind of volatility, if we happen to close that gap and close above 393.06, I do think tomorrow 400.08 is likely. And that is sort of our more meaningful, I call it 3-star resistance, able to contain buying through next week. And from there we can fall off, possibly back to 368.72 within 3 to 5 weeks of testing 400.08. Not until we actually close above 400.08 do I see a good case to be made for a good December low, and the next several weeks then likely to push into that 414.32 area. 414.32 more properly illustrated here as a long-term channel top that actually did contain the November 22nd highs. Let's talk downside today, that if we do break 383.13, 379.52 in reach today, and I'm giving that just session containment only. Now, we may bounce there through the rest of the week. We could bounce there through Friday. A 2 to 3 day bounce is quite possible. But I think for the day itself anyway, we can place a daily low. And if we settle below 379.52, then we should test the 373.23 descending channel bottom tomorrow, which is dropping at a pretty steady pace. And it will merge over the next week with that 368.72 channel bottom. That 368.72 able to absorb selling through January trade. And, once tested, we can turn up to the channel top, presently at 414.32, within several months of testing 368.72. So, it is a relatively, how should I say, two-sided framework, short term, between, say, 393.06 above the market and 379.52 below the market. But honestly, I think of those 2 points that you're looking at right now, the stronger of them is the low 390s, and below which you have to respect this market's ability to continue south into that lower support area at 368.72, which is preceded by the channel bottom at 373.23. I think that actually kind of sums it up. I don't think there's anything else to say. Thanks for watching. Please click like and subscribe. And I will be back tomorrow with Thursday's Daily Triple Q Report. You have a great evening.